What's going on, traders? Welcome to the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers up here on the left. So as always, we will be covering our broad market, relatively unchanged this week due to the shortened trading week. After that, we will get into our core list of companies, and the Discord members did vote on a new set of quick fire round tickers. If you want to vote for next week, feel free to join the Discord. It's completely free and linked down below in the description, along with all of our other free resources. Without further ado, let's hop in. So jumping right into our SPY weekly chart, talking about candlestick structure and location as well. For structure, we kind of have a red hammer-esque candle. I wouldn't fully consider it a hammer because the lower wick is not nearly large enough. It's not larger than the body, but what we can take away, especially about the two groupings of candles here, is that our range is compressing, right? We're getting sideways consolidation through time as opposed to correction through pullback, aka downward price action, which, again, the sideways option, the first option, and what we're seeing here is the more bullish of the two options for, digesting price action. In terms of location, again, I think this is a bit of a tell. We're clearly respecting the prior week's low, and we're not even trading back into that large green-bodied candle, at all whatsoever. So still one time framing higher here on the weekly time frame. Nothing really concerning about volume down here, just kind of steady sideways to slightly up. So this balance that we're in is very evident here on the SPY daily chart. I mean, look at this. We're just sideways within this overall context of, this range here. The way we play these balances is, as always, we have a couple of rules, right? If we break out to the upside over our 392.40 area, of course, we do have a bump in the road at 394.17, but a true breakout would probably double the range here up to, let's just put a value to that. That's going to be around 396.50. So that would be an upside target if we start to break out. Obviously, you're going to want to hold on to a little piece to see if we get continuation further than that, but that would be your first kind of target to the upside. The downside targets here are going to be a little bit different, right? Because we have market structure below us and we're not just moving into blue sky territories. One thing I want to point out before we, completely dive into our levels is our Fibonacci's, right? And it's kind of important to just keep an eye on where we're at in terms of healthy pullback, just to keep perspective. The 38.2 is always what we want to see hold as support, and obviously, I mean, we haven't even come close to it. So all things good there in terms of, this sideways consolidation truly being healthy. If we start to break down below, though, this 387.50, which was the liquidation break low from the prior two Wednesdays, then I would be looking at this area, which did coincide very closely, right, the 385 mark, with our Fibonacci 38.2. So that would potentially be a viable area, to me at least, if we start to break down below, again, the low end of the balance. Anything underneath, I think, as we've talked about in the past, starts to open up the possibility for a gap fill underneath us. But the key thing to at least make note of here on SPY is that depending on when this happens, right, as time continues on, our support trend line and our 50 SMA will start to be above this gap, and breaking that support trend line and breaking that 50 SMA would not necessarily be a good thing for maintaining this daily uptrend. So, potentially repairing this structure here could not, it could be catastrophic for the daily uptrend that we're in. Would it be the end of the world? I mean, no, absolutely not. If we zoom out, again, a pullback that would look something like this, not the end of the world here in terms of the overall uptrend. In terms of the trend line itself, yes, it would technically be a break. One thing we did in last week's video, which I just want to do one more time, is redraw this as a channel to illustrate that, although we did go sideways through time, we're still fairly close to that upper end of the trend channel, right? We're kind of close still to the upper portion of the resistance trend line. So it's just something to keep in mind. At this point in time, I don't really have a directional bias as to which way this balance area will break. And the reason I say that is because if we look at where Friday's close was, I mean, it's quite literally smack dead center of the range, right? It's not clearly up towards the highs. It doesn't look like we want to see a breakout, or, we didn't really make it all the way back down to the low end of the balance. That would signal a breakdown. So again, it's going to have to be over our 392.38 or under our 387.50 area. Jumping over to our Qs now, and again, same thing here. If we look at our balance range, looking something like this, technically we got a little bit of a look above and fail back into the range. Tech has been a little bit weaker. I don't really want to use the word weak because I don't want you to misunderstand that. If we look at the daily trend here, right, we're still forming a bull flag, and there's nothing weak about that. But in terms of price action that we saw this week, I know I'm saying weak so many times, we did see a little bit of a pullback, right? But we're just back into the range. This one is is a little bit different. We closed closer to the bottom end of the range here, closer to that 330 mark. So if we go under, obviously the week's low is going to act as sort of a gatekeeper before we start to fill the gap here. Now, the key difference between this and the SPY chart, of course, is that the gap will be above our 50 SMA and above our support trend line. So repairing market structure in the Qs would not be the end of the world. If we throw our Fibonacci's on just to stay consistent here from, let's go to the high here. Okay, perfect. Look at that. If we look at the 38.2, that's exactly where we pulled back into, and that's again kind of what we want to see hold in terms of healthy pullbacks for the daily bull flag that's kind of forming up here. And again, that's the exact low of Thursday. So interesting to note there. We talked about the gap. One thing again I do want to do is redraw this support trend line as channel, because I think this opportunity is good for learning, right? If we look in the past, the 50% mark on the Qs specifically did tend to act as resistance. Now that's hindsight trading, of course, but how can we use that moving forward? Well, we know that prior resistance should act as support when it's broken, and that's exactly where we started to bounce from, late in the week, this past week in the Qs. So if this truly does hold up as support at the 50% of the channel, then I do think we remain in this balance. So again, it's just one more piece of support here, closer to that 328.41 area. To the upside, blue sky territory is over our 335 area, we'll call it. And last but not least, IWM Russell 2000 and our small caps. We talked about the fact that this was potentially the best setup of all in the midweek market update. We had a hammer candle that repaired structure here on Wednesday, and essentially what it resulted in was a look below and fail, right? So we looked below the range, we failed back into it, we repaired structure, held on to the daily support trend line. Everything about this setup here is pointing to rotating back up to the high end of balance, which is up closer to 228.83. Anything above, obviously, we're looking for a move higher. You could potentially look to double this range, right? That would be true balance rules there, and that would put us closer to 234 as an upside target. Now that's the extreme bull case. Again, first target would definitely be here, closer to those all-time highs. If we set a lower high, though, this is the potential scenario for you to know whether or not we're moving lower. If we cannot make it to the high end of that balance, let's say we do top out somewhere in here below, that would technically be a lower high, and we could start to draw in a resistance trend line, right? Something that would look like this, and then a break of our support trend line. I think it's game over, and we probably move back down into market structure at 215, the whole dollar. Anything underneath would be the 50 SMA. But all things considered, the pattern that we just talked about here, repairing market structure here, I do think the move will be up here in the IWM. The daily uptrend is just so strong. I'm not willing to bet against it yet at this point. And quickly throwing the Fibonacci's on here for consistency's sake. If we go from low to high, once again, the 38.2 is critical. And where did we hold up this week? Boom, at the support trend line at the 38.2. So again, everything about that right there is just, again, keeping me from betting against, at this point in time, the IWM. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. So jumping right into Apple, you can clearly see our head and shoulders pattern did play out, but now it's a question of whether or not, these three candles here are truly going to break down. As of this point in time, again, nothing about that cluster of three candles is telling me that sellers are taking full control. As a matter of fact, it's almost the opposite, that buyers are really stepping up and starting to buy this pullback here in Apple. I mean, look at the volume and look at the lower wicks that were put in. It doesn't look anything to me like sellers are really stepping up and trying to drive prices lower, especially with a higher low and a higher high there on Friday. If we continue higher, of course, we have to recontend with that 50 SMA. Just above that is a small gap in the chart from 132.25 up to 132.79. I would expect that to fill if we trade into it. It's so small, I don't see why it wouldn't. Anything above that, though, if we get there this week, I'm anticipating chop between 133.71 and 138. To the downside, let's say there is some selling that does materialize. Obviously, 126.64, we technically set a higher low than that on Thursday. So if we retest, I would expect it to hold on the first touch, but if it breaks, again, that's kind of going to be a flush point at that point in time, in which case I think, again, this is only if sellers start to take a hold, 121 could be in store. But based on these three candles, I do think sideways to up is the preferred direction in Apple. So Netflix, on the other hand, again, a great days here on Wednesday and Thursday, bouncing right off of those areas of support that we outlined in last week's video. But the obvious, takeaway here is Friday's candle did close weak as opposed to strong like Apple. So to me, I think we want to at least revisit that 531.11. It's where the 50 SMA is, so I am expecting a first touch bounce there. And just to clarify, I'm not sure if this has been clarified in the past, but what I mean by first touch bounce is definitely an intraday bounce, right? I'm not looking for a full daily reversal candle out of that level. I mean, if it happens, great, but a first touch bounce is truly when it touches it for the first time intraday, that's when I'm expecting the bounce to happen. So first touch bounce there at the 531 and 50 SMA. If it does break, I think we move to the top of the gap here at 515.66. Gap fills down to 509. We'll call it the whole dollar. And with this red continuation candle, again, a little bit more bearish than bullish here in Netflix, but some upside targets. This one will be critical here at 553.13. If there is a major reversal at that 50 SMA, let's say it does bounce, again, which is great, but not the first touch bounce, right? We would have to clear that before I would start to get bullish on the pressure cooker top here at 566. So Tesla is an interesting one to talk about for two reasons. First one is the fact that we had this consolidation range that we were trading in, and now we're starting to trade below it. What's critical here is whether or not support trend line, horizontal support, and 50 SMA will hold. If all of those things hold, then I think we see a look below and fail, in which case we're retargeting the 840, but ultimately the 880 sort of upper end of resistance from the range, those would be upside targets. But if we cannot get back into the range and this critical market structure below us starts to fail, I think we probably start to see some of these lower targets much quicker than you think, right? We've talked about the fact that, the market has experienced some gamma squeezes to the upside, right? But what happens when this gamma squeeze happens to the downside? Some people call it a gamma squeeze lower. Some people call it the gamma unwinding, right? If people start to buy puts on Tesla because that's the profitable thing to do, we're breaking critical market structure, then technically the market maker is now long 100 shares of Tesla for every put that they have to sell you. And they don't want to be long something that's going down. So what do they go out and do? They then have to sell again. So they are positive delta from those puts, right? Positive delta from the puts. They will have to neutralize that delta by then going out and shorting actual shares of Tesla. So S of TSLA, therefore, further pushing prices to the downside. So don't just think that the gamma squeeze can only happen to the upside. When it happens to the downside, it's going to be just as, harsh as, the move to the upside. Technically, you could think of this as the market crashing to the upside. And when the gamma squeeze happens to the downside, it will just be a market crash. And I'm sure people will not be happy with that and, will think it will come out of nowhere. But there you go. There's some reasons why, again, Tesla could move here and here quicker than you think if some of this market structure does start to break. And again, it's only if, right? Technically, the daily uptrend is still very strong. We're only first testing the 50 SMA. I don't want to get it in your head that Tesla has to crash. But once again, if the market structure breaks, you could see some of these targets quicker than you think. So Alibaba is just a wreck to trade, right? There's really not many, daily setups that have occurred in recent history here. So at this point in time, I would just be looking for a flush underneath our 261.77 to potentially come to 200 SMA. But more importantly, the lows here at 252.78. Anything underneath, obviously, very choppy structure in the past. But the next critical level is closer to 240. I'm not anticipating that this week, but it's just something to keep in mind. To the upside, again, not really anticipating any upside activity based on our chart here. Inverted hammer on Friday, followed by a hammer on Thursday. I mean, just extremely choppy, right? This breakout zone here has not materialized in nearly anything, right? We had a gap above that partially filled. Now it's fully filling from 274.25 up to 275.72, and then the larger gap above that here from 280 to 290.57. I mean, just nothing about this chart to me is screaming any clear setup. So Facebook did experience some pretty serious sell-side activity on Friday, as noted by the increase in volume down below. We're breaking critical daily support, right? That's at the 265 area. If I just zoom this chart out a little bit, you can see how many times we've respected it in the past. 1, 2, 3, all these touches in here, and it's finally starting to break on some serious strength to the downside. So all things considered, I wouldn't be surprised, right, if we saw a dead cat bounce early on Monday. Maybe it rolls over into Tuesday, but as at this point in time, I'd be looking for, again, maybe a little dead cat here and then a move lower into next support here at 255. Anything underneath that, there's the 244.20 mark. And I'll just remind you that there's a large gap in Facebook underneath that, right? So I don't think it necessarily goes there this week. It doesn't have to go there this week, but it's something to keep an eye on if Facebook continues to move lower, right? We are continuing to form these lower highs here on the daily time frame. This time we couldn't even make it to that resistance trend line. So all things considered, I do think Facebook does move lower here as opposed to higher. To the upside, let's say we do get a crazy reversal out of that 200 SMA. You can see that it acted as support here, kind of here. Let's say it does one more time. We'll have to battle back up through that 269, we'll call it the whole dollar. And then anything above is here at 273.51. So NVIDIA does have to contend with earnings this week. They are on the 24th, and it looks like they are after the bell. So keep that in mind. I would not swing trade options through that. But for now, we have a daily bull flag forming, right? Something that looks like this. Here is your flag pull. And as long as we can consolidate in this box, I think a break over all-time highs looks good for continuation. And we always talk about doubling of the range. Let's just eyeball test it. Where would that put us if we do something like this? Let's say we truly double that range. It's going to be about 635, right? Somewhere in, or 630, closer to 630, the whole dollar. That could be a potential upside target. To the downside, again, the daily uptrend here is strong. And the fact that we consolidated for so long in here and we're finally starting to see some directional movement, I think keeps this trend intact, right? The more people that were either accumulating or waiting in anticipation of the break in one direction or another, they're not going to want to see it come back down and chop back down into this range. So I do think that we hold on to some of this prior market structure. Previous all-time high 590, anything underneath 573.52 would kind of be my line in the sand for remaining bullish on this particular pattern here, the daily bull flag. Microsoft, I did get rid of the support trend line that we had, looked something like that. Technically it broke, but we're just going sideways through time. Very similarly to the Qs, if we look at our range, we're kind of at the low end of the range. And if we break down, again, we talked about in prior week's video, we have this range to contend with, but that's kind of broad, right? There's a lot of price action in between there. So let's use doubling rules to really, see where the first downside target would be. We're looking at 230, let's just call it 236 for round numbers sake, smack in the middle, almost the middle of that chop in there. So that's a downside target if we break 240. Anything underneath is 231.15. For now, again, daily bull flag here. I don't want to, skew your thoughts to be overly bearish here on Microsoft, especially coming off of something that looks like this. Right? But, those are downside targets. To the upside, if we break out over our 245 whole dollar, again, we'll have to use our doubling rules to see where that puts us in blue sky territories. I would argue that we probably want to go to 250 psychological. And last but not least, Amazon, right? This one had a very interesting Friday, kind of just like Facebook and even Netflix, right? Taking back a number of days of prior green upside activity and closing right at a critical support, right? So we're at the 32.50 mark. If we see, again, just like on Facebook, a little bit of a dead cat bounce, I'm not really expecting it to take back more than 50% of that range. If it starts to take back 50%, then it's more than a dead cat, right? But if it stops there and then retests that 32.50, I would expect lower here in Amazon, probably into our 3,200 round number. Anything underneath that, you can see there's some ways to fall down to 3,100 to, I would call it 30.75, right? There's a little bit of a zone down there from some of this prior support in here and in here. Again, to the upside, if it's more than the dead cat and we move higher, we're just looking at 33.44 and then 34.30 after that. I'm not really anticipating, based on this candle on Friday particularly, any extreme upside activity, right? If that was going to happen, we probably would have held on to 50% of this range in here and done something like this on Friday, but again, not being the case, and on substantial red volume, looking at downside targets first. Kicking off the quickfire round with PLTR for what feels like the 1 millionth time. You guys really love this one. Over 10 votes for this ticker in the voting process among the 50-plus tickers that were voted on. So a very popular one in the Discord. Get in there if you're not already. For now, we talked about in last week's video earnings, sending this to either 25.25 or 38 according to the market maker expected move / options chain. Give them a pat on the back because that's exactly where we went, right? It's not going to happen perfectly every time, but it's good to have some of those targets in mind. And for now, we're starting to see the forgotten baby, lost baby abandoned baby. It's one of those three. Let me know in the comments which one it is. But this is a bullish reversal pattern, right? If we can continue and get a stronger close above that 50 SMA, I don't see why PLTR wouldn't come back up into this range and experience some more consolidation. Look at this volume down below. I do think this is stronger accumulation down here at these levels. People really stepping up and buying some shares to hold on to, from this pullback that was offered from the earnings sort of sell-off, if you will. So all things considered, the line in the sand on PLTR, you do not want to see it underneath 23, kind of the whole dollar in that area. If that fails, again, kind of very little market structure below us. I don't think it goes there at this point, and again, that's why it's the line in the sand. Jumping over to NEO, I'm going to keep it brief here because we do have earnings coming up on the 1st of March, which could make anything I say here irrelevant. But for now, hammer candles forming at 50 SMA at critical support on the daily. I would be interested in looking for some sort of bounce to at least revisit this 59 area of resistance. From there, it will be critical on whether or not we can make a higher high at that 64.32. If we do, then in that case, again, we're looking for trend continuation. But keep in mind, earnings, again, could throw a wrench in anything I say. If we fail here, targets below are closer to 50, the whole psychological number. Roku, just an absolutely brilliant uptrend here. You can see, I mean, it's perfectly stair-stepping higher, right? Move higher, pull back, move higher, pull back, move higher. Consolidation / pullback. With these hammers that are forming, to me, it looks like we are, getting ready for a next leg up, if you will, up and out of this consolidation. We are hanging on to prior area of resistance as market structure here, closer to 445, we'll call it the whole dollar. So any moves up and over sort of this all-time high resistance zone around 490, let's call it 480, the whole dollar, I'd be looking for blue sky territories. It does not look bearish whatsoever at this point in time. If we draw in a support trend line, I believe you'll see that we're respecting it. Yeah, I mean, look at that. Hammers right above that support trend line. To me, it looks good for upside continuation. Target starting to get back into our support trend line here, and actually we could draw in now a resistance trend line for a clearer idea of where a bullish entry would be. So anything above this sort of triangle, as it starts to run out of room, you would just retest the top end or all-time high here, closer to 200. If we fail at the support trend line, then probably back down to the 50 SMA. You can also see that it did act in this section of the chart, particularly those three candles, that cluster of lows, 184, call it 185, did act as support in the past. If we go there expecting a first touch bounce, but anything underneath, retest of prior market structure here, closer to 180, the whole dollar. So Peloton, although that green continuation candle, signaled to us that we wanted to see green continuation, we couldn't fight with the chart, right? So as that reversed on Tuesday back into our flush point, we talked about this, that if that area did break, expect a substantial move into 139. So we got that move, and now we're just going sideways. Technically, what we have here is a daily bear flag that's starting to form, small body consolidation here. If we break the 139 again, or if we just break this little double bottom that's formed here, closer to 135, the whole dollar, that's the key to 125.61. To the upside, again, you have the market structure above us, which we'll now have to battle back through. 145 is the critical area of resistance that I would be watching out for. So Sundial was a penny stock at one point, and now it's over $1, so technically not a penny stock. And, these are kind of out of my wheelhouse, right? This one obviously experienced some sort of major momentum play to the upside. Again, to me, just looking at this from a technical perspective, we are retesting very critical, breakout zone here around the 127 figure. I would say that there are probably even smaller increments that you would want to be looking at on the y-axis for support and resistance here. To the upside, if we get a continued and sustained bounce, I mean, $2 seems to me stand out as an area that I would want to pay attention to. Anything underneath our 127, I would be looking out for a very tight support below, close to 110. And then anything after that, I mean, it's probably back down to 75 cents, 77 cents for Sundial. But to me, again, it's not really in my wheelhouse here. To me, it looks like a pump and dump. I certainly don't want to discredit whatever Sundials has going on. If you've done your due diligence, you understand the company better than me, feel free to play it within whatever risk confines you feel comfortable with. FRX, not a whole lot of information on this chart at all. I would just be watching out for a move potentially underneath the low of Friday, 1385, to fill the gap below to here around 1267. Huge inverted hammer candle, right? Call it a shooting star, whatever you want. But basically, sellers took control all, whether or not it was afternoon or whatever. It looked something like this intraday, right? So to me, sellers clearly in control, large gap below us, just doesn't bode well. If you're a buyer up here, then I would just cut your losses at this point. Could this thing fully do a reversal and, go to 20 bucks? Maybe, but there's just not enough price history here for me to feel comfortable giving you targets. Obviously, we talked about the gap, anything underneath. I would say your critical area of support is closer to $10.85, $11, somewhere in that general area. CCIV, shout out to our moderator Aditya for having this from a very low cost. Great trade on his end, and for now, forming a bit of a bull flag on the daily time frame, consolidating after this extremely large move to the upside. I know there's been some talks about a merger or something of the sorts. Again, I'm not fully aware of all the fundamentals behind this. I am a technical trader for intraday scalping, but to me, again, the daily bull flag here looks pretty good. As long as we consolidate above sort of that 50 whole dollar, I would say that the chart does something like this, and then boom, we might get another leg up if there's some other catalyst that comes out around Churchill. Now, if there's a negative catalyst, then keep in mind that anything under 50, not a whole lot of market structure until we come back down into an area closer to, let's call it 35 the whole dollar. Checking in on Snapchat. We made a great call on this in the Discord as well on Friday. We were talking about this daily bull flag starting to break out, and it's just day one of the breakout there on Friday. I would be looking for continued sustained action above our 65.35 resistance area there for continuation, day two continuation. I mean, check in on volume down here. It looks good for a breakout volume. The area that you want to see hold, if we move lower though, is probably closer to the 61.25 mark. That's the bull flag consolidation lows. Anything underneath, again, probably moves back down to the top end of this consolidation in here, closer to 54, 55. But as of now, it looks bullish. Everything points to up here in Snap. And lastly, checking in on Disney to wrap up the quickfire round, retesting prior market structure, which is always a play I like to consider when we retest a prior all-time high for the first time, looking for a little bit of a bounce here in Disney to continue the daily uptrend. If we look at this move here, it's basically a daily bull flag, right? We can even throw our Fibonacci's. That was kind of the theme of the broad market, but we'll throw them on here just to see where we're trading at. Again, we're trading above the 38.2, so a healthy pullback, respecting prior market structure. I'd be looking for any sort of reversal candles here, so more of a hammer that gets followed up with green confirmation, so over the high of that hammer. If we can hold on to that 182.82 mark. To the downside, if it fails though, look for the 50 SMA before we come down into the 175, I'd call it, area, sort of this zone in the chart. You can see it was prior breakout area in here, sort of acted as support, a little bit choppier though, so that's why I'm calling it 175, but 50 SMA before that. To the upside, obviously we're retesting the all-time high if we get that bounce that I was talking about earlier. So that's going to be it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section, and with that, I hope you have a green trading week.